The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. For those of you that have arrived to this Fibonacci trading webinar, if you can confirm that you can hear my voice and also see the screen in front of you clearly, that would be great before we proceed. Excellent. Good to hear that. So let's begin this webinar. I'm going to give you a quick introduction on who we are, and then I will discuss Fibonacci theory and how you can use Fibonacci retracement patterns to make money in foreign exchange trading. And then we'll discuss specifically stop loss and take profit levels. And then, as always, we will end on a Q&A where you can ask me questions. And of course, this webinar is recorded, so you can email webinars@hotforex.com to get access to it, or just view it in your HotForex control panel. Before we proceed, kindly take a moment to read through the disclaimer. It's very important, and also the risk warning, as foreign exchange trading is very risky. And then we'll proceed after that. Okay, so I hope you read that warning. I'm seeing some people saying that you can't hear any sound, can't get no audio. Can you confirm that, please? I didn't say anything for the past 2 or 3 minutes while you were reading the disclaimer. Okay, good. Let's proceed. So we are Blue Sky Forex. We're part of Blue Sky Binary, an education, research, and trading group, and we teach a range of strategies in both FX and binary options. And we are presenting this webinar on behalf of Hot Forex in order to educate you to help you become highly profitable currency traders. Now, there are two types of markets that you will encounter, either trending markets or ranging, also known as bouncing markets or range bound. And you can use Fibonacci in both types. Generally speaking, Fibonacci retracement patterns, which is what we're going to discuss today, are the focus of this webinar, and they are used mainly in ranging markets or mean reverting or bouncing markets. Okay? So let's start with Fibonacci theory. What is Fibonacci? Why is it important? And this is important to set the kind of tone and background behind why these Fibonacci levels work. Okay, Fibonacci numbers or Fibonacci sequences are the numbers that occur in the following order: 1, 1, 2, 3, 5. These are all prime numbers, and then you have an even number 8, and then 13, 21, 34. The current number is the sum of the two previous numbers. That's it. It was discovered by the Italian mathematician Leonardo Bonacci in the 13th century and introduced to Western mathematics although its origins predate this and are traced back to Indian mathematics. While the sequence above is relatively simplistic, Fibonacci sequences are found in nature, and that's important. In bees pollinating and procreating, flower pollination patterns, and other biological systems. As we humans are part of nature, so are our trading habits. They are emotional. We fit our trading habits, our buying and selling decisions can be mapped into Fibonacci sequences. So it's a very interesting theory. And this is especially applicable when price is progressing and increasing or decreasing in value. It will tend, these waves of increment or decrease would tend to follow Fibonacci sequences. Not always, but a good portion of the time. Now, you will have in your chart Fibonacci arcs, Fibonacci fans, time zones, and retracements. We're going to focus on the most popular indicator, which is known as the Fibonacci retracement indicator. And this one basically allows you, the FX trader, to assess until which point the price of an asset will retrace after falling a lot or rising a lot. And for those of you that have been on our news webinars, you will know that these are very useful tools, retracement patterns, indicators, during a broader retracement after the news has occurred early on in the day, right? So if there's been a big move up, then towards the end of the day, if you're looking for an end of day retracement to capture a few pips, you can use the retracement very well. Now the retracement, what I mean by that is the bounce after dropping a lot or rising a lot, can occur up to 23.6%, 38.2%, 50%, which is halfway, 62%, or it could retrace fully, which is very rare. That would be 100% retracement. These levels, 23.6, 38.2, 50, and so forth, they act as potential entry points or exit points, depending on where you got on the trade, right? So they're good radars for you. So whether you're trading a trend or a reversal, these can be good take profit, stop loss, and entry points. Okay, I'm going to show you visually how that works, but let's discuss some key steps that you should be aware of before entering a Fibonacci retracement trade. Firstly, wait for the price to drop or rise a lot. And what I mean by a lot is 100 pips at least, if not 150 pips. This is triggered by big news events like non-farm payrolls, interest rate decisions, and all that. It obviously occurs during the main trading day, so 8 a.m. to 4 or 5 p.m. GMT. Not so much the Asian session, but the European and London session. You should ensure that it is after 5 p.m. London GMT, so the London market should be closed. Select the Fib retracement indicator, Fibonacci retracement indicator in your MT4 or whatever chart platform you're using. And then what you do is you draw a Fibonacci line from the low, right? So here, it's a live example. The price has fallen around 100 pips, okay? And what you want to do is you basically want to draw a line from the low, which could be the previous hourly candle or the one before that, all the way to the price before it fell. And this will create an array of 5 Fibonacci entry points, Fibonacci bounce points. 23.6%, you see it here, 0.236, 38.2, 50%, and 61.8, and then 100%. So what these tell you is that generally speaking, when the bounce initiates, right, when the market starts to, let's say people had shorted and the price fell a lot, they made a lot of money, so they're going to close their shorts. When the market participants close the shorts, they're effectively rebuying borrowed currency, and what happens is that this causes upward pressure. For those of you that want to know why exactly you get these dead cat bounces, it's because of the closure of shorts. Or people getting bullish at a low price. It can be both. All right? So here you're going to see the price probably will retrace at least to the 23.6 level. That's a weak level, so you can play this opportunity, and this can be 10 to 20 pips, which is a good scalp. When it's moved there, you can use a trailing stop loss and move price up 5 pips below this, okay? If you don't want to just take 10, 15 pips of profit, you're a bit more risk-seeking, then you can move your trailing stop loss up and then set your take profit level at the next Fibonacci point, which is 38.2%. And you can keep iterating this process if you believe the price will retrace all the way up to the moving average. Or in certain instances, the total retracement, which is very rare. Okay, but generally speaking, what these points are telling you is that, okay, the price has dropped a lot and it's going to retrace till one of these levels. And the nearest level is 23.6 level. That's a much higher probability retracement than the 38.2% level, which is a much higher probability retracement than the 50% level. The other thing to do, if you don't want to go long here, is to wait till the retracement happens and then open a short position. Because generally speaking, this major news is fundamental. Anything that moves the price 100, 150 pips is fundamental. That means there's a repricing of the asset that has begun today, and it may continue for the next few days. We had this in Brexit, right? We had this in Brexit where the British pound fell against a basket of pairs, 1,500 pips, 1,000 pips, and then it bounced. There was a huge dead cat bounce, a few hundred pips, but it only hit the second or third retracement level, at which point it continued south. So if you want to be low risk, you can wait for those bounces and enter shorts at these retracement points, or you can just enter long and play that initial bounce. Okay. Okay, so the key thing to note is that you are using this Fibonacci retracement pattern or grid to either set your take profit levels if you're trading against the trend in a retracement or in a bounce, or your entry points if you're actually trading with the trend and you're just waiting for a bit of retracement to enter a better price. Instead of going short here, which is at the bottom, or at a swing low, you're waiting for a intermediate retracement or intermediate swing high, and then you're re-entering to play this trend short. Okay. Now, you can use this in reverse as well. If the news has been positive, so you get a massive breakout north, which is what we've shown you in our fading the news webinars, then you would be opening shorts, right? So you reverse the way you draw the Fibonacci. So everything I've said, you just reverse that, and you would use that to open trades and lock in gains. Okay, so we would ask you to use Fibonacci with major news events because it creates these huge gaps. It widens the ranges, the Bollinger Band ranges, and it creates these bounce opportunities. You can use Fibonacci on shorter time frames, and I'm going to get to time frames next, such as 5-minute charts, 10-minute charts for scalping purposes, but we would not advise it because these levels are less adhered to. So the ideal time frames for you to use Fibonacci sequences is 1-hour charts and 4-hour charts. Okay. So let that sink in. It's a very powerful tool, especially when you see wide ranges in the market. You can certainly use it. I would draw this on the 4-hour chart or even 8-hour chart, and then zoom into the 1-hour chart and redraw it. And then you can correlate the different Fibonacci patterns and then find some really solid entry points. Okay? And you can use this with indicator arrays as well. Okay, so you can use this with stochastics or oscillators such as RSI or MACD, moving average crossovers, right? I would not get too complicated. I would not add this on top of Ishimoku for those of you that are trading the Tenkan-sen crossovers or the cloud bounces. I wouldn't necessarily focus too much on that, but you can certainly use basic indicators like RSI divergence to trade these. Okay, so that's it. It's short and sweet, but this is how you use the Fibonacci retracement indicator. I'm now open for questions. Vincent is asking, can you teach us how to use the Fibonacci time zone? Yes, we can set up a webinar for that. Remember, if you want additional webinar topics, please request them to webinars@hotforex.com, and we can set up separate webinars for time zones and fans and arcs. Just note that these are very rarely used. Okay, this is used by the large percentage of the market. Sure. So Arnold has asked me to go over how you draw the Fibonacci. Very good question. So I went over that once. I'll do it again. Arnold, you look at the drop during the day of the price, right? So if it's moved 100, 150 pips, generally speaking, that's the range that price will complete in a day. It won't go more than that, right? Generally speaking. And so what you would see is around 4 or 5 p.m. GMT, you see the entire drop. You get your Fibonacci retracement tool out and you start here at the low and you draw up to the beginning. And it will open this grid. It will open up the Fibonacci levels automatically, and you'll see until where it can retrace to. With certain chart packages, it's the other way around. Okay, it's rare, but it's the other way around where you start from the pre-drop and you draw it to the drop. As long as the 23%, 38, 50% are near the low, you know you've drawn it correctly. And with the opposite, you would draw it from the rise, right, where you're starting to see exhaustion, till the beginning of the rise for a long. Sure, Malik, what would you like to know about Fibonacci extensions? Rahul, what are your questions specifically on the Fibonacci? The reason we have done this webinar not doing all four is because they are each individually very different, and I don't want to load you with too much information. Fibonacci retracements, this is what you need to know to trade it and make money from it. We can, of course, spend 15-20 minutes on the others, but this will confuse you then because it's a pretty dense indicator. But if you have any questions about the others, feel free to ask. Good question from Catalan. Fibonacci retracement works best in combination with divergence and oscillators. So divergence indicators like RSI, if you're trading hidden divergence or normal divergence with the price, it's good because when you start to see the divergence of I haven't shown RSI here, but if it was there and you start to see diverging with price, that's a good indication that the price will reverse. Also, you may want to potentially use a moving average crossover here as well, so it works with that. So a MACD. And if you consider Japanese candlesticks, for those of you that have learned Japanese candlestick theory, which we teach here, if you start to see exhaustion here, like bullish engulfs, and you start to see shooting stars, inverted hammers around this point, it's telling you that it's bottomed out, and that's probably there's going to be a bit of a retracement, normally until the 23.6% level. So you can use it with candlestick analysis. I mean, that's a given in my view. You should always do that. Okay, see a question from Barun. I'm a short trader. Generally, I traded for 20 to 25 pips. Will Fibo be helpful for me? In which time frame is perfect? Yeah, so for a short trader, you're not going to be trading this unless you're taking a bounce off the 23 or 38% levels and going short there. You can do that. And yes, you'll be able to capture enough pippage, certainly 20, 25 pips. The time frame is key. You want to be trading this on 1 hour, 4 hour time frames, not 5-10 minute charts. And for a proper short, you would actually wait for good news during the day. So the price rises 100, 150 pips. You start to see exhaustion, and that's where you would short. Thank you, Malik, for the positive feedback. Very good question from Kotso. When using Fibonacci, do you measure from the wick or from the body? The answer is the wick. Okay, always the wick. Okay, Rahul is saying, I've been watching that in the last couple of weeks, Euro-US dollar market, the price has retraced 100% 3 to 4 times. Yes. So the reason this was happening, and by the way, 3 to 4 weeks is nothing in the grander space of things, right? You have to always look at these type of very low probability events on an annual basis or quarterly basis. If you also see what's happening in the Euro-USD, it'll start to make sense. The Federal Open Markets Committee, FOMC in the US, has been bullish on interest rates after Trump. So you have a large move in the dollar, and that causes an immediate retracement in the Euro-USD, right? So you get a lot of fake breakouts, a lot of news like this, which are immediately retraced. But that's driven by news, heavy news, or counter news, right? So that would explain it. But if you've been in the market, Rahul, for a few years, then you'll see that such 100% retracements are generally very rare. Okay, Arnold is asking, in a downtrend, is there a particular reason why the price would move from 100 and bounce at the one, you mean at this line here, the 61? It won't do that. Remember, Arnold, I've drawn this Fibonacci after the entire move is over. So the question is, will it bounce from here to the 61.8% line? It won't bounce at the 61.8% line here retroactively. That's impossible because time is linear. It moves in one format, right? So you need to see this, don't forget that time is moving forward, not backward. So here I drew the Fibonacci after the bounce, which created these 4 lines, the 61.8% as well. And so the question is, will it bounce up and touch that and do what? Yes, okay, Rahul, welcome to FX. Okay, Rahul has a question. Would you think that the oath taking of Donald Trump, which he's referring to Donald Trump being incarcerated, inaugurated, his inauguration speech, will that weaken the dollar or strengthen it? That will strengthen it. So generally speaking, the investors are very excited for the US now because Donald Trump is pro-business. He's a businessman, and he's going to be business friendly, helping businesses pay less tax, open a lot of oil deals in Russia with Skip, I believe it is, the Treasury Secretary, who's ex-Exxon, who just closed a big deal with the Russians recently. So he's business friendly, and so he is going to be good for the dollar in the short run. My personal opinion is that, but because of this, there's also going to be a financial disaster soon in the next 2 years. It's been 10 years and we get a recession. So 2018, 2019, I think there's going to be a collapse in the stock markets driven by Trump's policies. That's my personal opinion. And I think that will cause the dollar to be in structural decline permanently. Not permanently, but over the next 5 to 10 years. Let me show you why I say that. You should probably see this chart. Hang on 1 second, okay? Just going to show you something. Just take 1 minute more. It's worth waiting, trust me. Can you all see this chart? Do you all see this chart? So you see here that the dollar is in structural decline, no matter what, because they keep printing money, and the rate at which they're printing is exceeding the actual resources. It's headed to zero. Eventually, the dollar will be a fully fiat currency. It already is, and like other currencies, it will be phased out. And when that happens, we don't know. Could take 10, 20, 30 years, but generally speaking, that's why you're seeing Bitcoin and all these cryptocurrencies rise in value. There's a structural decline, right? Rahul is saying, but sir, you're wrong. His first speech last week, he weakened the dollar by 100 pips. Yes. The reason that happened was because he told CNN that you're a fake news channel. So the media got worried that he's going to declare war on news in general. And if you can't trust the media, if you can't trust the news, you can't trust the information distribution channel gets broken in an economy. Right? It's like what's happening in North Korea. The news is irrelevant because they just report what the dictator wants them to report. So that's why the dollar fell. But then people realized, oh, Trump is actually very good at business and he's going to help the economy. Yes, Arnold, that's correct. Rahul is saying there's a word in the market that $1 will become 1.12 euros till the end of 2017. Well, that means that Euro USD will go below parity. It will go to 0.9. It's possible. We firmly believe the euro is headed for parity, which is 1.00. I don't know if the if $1 will buy 1.12 euros. That's you telling me that Euro US dollar is going to 0.9 or something. Don't know if that's the case. But yeah, sure, why not? Okay, now Rahul is saying, but sir, the difference between US dollar and INR kept on increasing. Well, the Indian rupee has also been in structural decline over the years because inflation in that country is at 8 to 12%, but real wage growth is 4 to 5%, 6, 7%. So the Indian rupee is actually a very weak currency as well. Yeah, okay, Rahul. So now you're saying, I'm sorry, I actually meant €1 is going to be equal to 1.12. Yeah, that's possible. You could get a dead cat bounce. You're probably going to get that. It's fallen from 1.4 in the last 3 years, so a bounce is overdue. Personally, I wouldn't trade it either way. I think we're probably headed to parity before we get any real action, but let's see. Any other questions? Last call for questions. Miguel Castello saying, how reliable is FIB? Pretty reliable. It's a good indicator. It's as bad or as good as Bollinger Bands. If you believe in them, if you believe in Ishimoku, I think it's one of the higher quality ones. Any other questions? Final call for questions. Good. I see if no further questions, so we will see you next week. We have a new topic next week. Looking forward to it. And wish you good trading today and tomorrow as well. Take care.